This time is different. Or is it? Fed increased interest rates again. Inflation's here. It was never transitory. Can't print money ad infinitum. Now the pain comes to bring things back in line. Remember that debt, or printing money, is often borrowing tomorrow's fun today, pushing off today's pain till tomorrow. For lack of a better analogy, think of going out and having a few too many drinks on a Friday night. You may pay for it come Saturday morning. History may not repeat itself, but it certainly rhymes. I think there was a Mark Twain quote. The famous last words being, "This time is different." These aren't tulips. These aren't ostrich eggs. These aren't Beanie Babies. 10 years from now, perhaps people are saying, these aren't NFTs. These aren't SPACs. So when you see the allocation of assets towards things that don't actually yield cash flow, towards things that require a bigger fool, that is, that require someone else to value something at more than what you think it's worth on a quasi-arbitrary basis as being your only exit or your only means of monetizing your ownership in something, that's when it's problematic. When capital starts overly pivoting to those types of things versus things that throw off cash flow, that's when it can become problematic. Joseph Kennedy said in the 20s that he sold his stocks when the shoe shine started to debate him about which stocks were better than others. And perhaps you'll say the same thing. Someone with no experience in investing whatsoever telling you to sell all of your Berkshire Hathaway stock and pouring all the money back into Solana, right? And look, people have gotten very rich doing that, but you have to differentiate. Is this investing or is this speculation? Is this investing or is this gambling? And if you're okay with that, that's fine, but be very clear in what you're doing. Now, it's not all doom and gloom. You know, we can play the Grateful Dead song, "Every silver lining has a touch of gray." Now, if you have something that does have intrinsic value, something that throws off cash flow, that does have a yield, that does have defensible margins, well, that's valuable, irrespective of the economic season that we go into. There's still a tremendous amount of dry powder that has to be allocated over these next 5 years. And whether that's in acquiring cash flowing businesses and lending towards cash flowing businesses, the only thing that we can be really sure of is that it's going to be those cash flowing, fundamentally strong businesses that warrant much of the positive attention over the next 12 to 36 months in particular. Keep in mind that no matter what the economic situation looks like, there's an entire industry between private equity and institutional asset management that needs to deploy capital into deals. And that's going to go from the mega multi-billion dollar deals to the small sub $1 million loans. Timing the hype ideas, finding out what's going to be hot, how long it's going to be hot for, and reading the tea leaves as to what that next shiny new thing, it's a very difficult game. And for every Winklevoss twins, there's broke triplets somewhere that you've never heard of. It's boring, it's not shiny, it's not the sexiest concept, but what was good yesterday will be good today, and what's good today is going to be good tomorrow. Intrinsic value, pricing power, cash flow. This time ain't that different. Next time it won't be either. Appreciate everyone's time. Keep pushing forward. God bless. We'll see you next time.